Good afternoon, everybody. We have been talking about the fixed income market and bond trading for the last half an hour, but we definitely cannot speak about fixed income and bond trading without speaking about repo markets. Why? Because actually the repo market is the link between bond, money markets, as well as derivatives. Without a well-functioning repo market, we won't have enough liquidity for a well-functioning fixed income market. So why is it so important? This is what we're going to be talking about. Hold on, let's rewind. What is repo? How is it used? Who are the market participants? What makes the market? Who makes the market? What are the usages of the repo market? Is it traded in the same way in the different markets in the MENA region? And most importantly, what can we do as an industry to make it more, a deeper market, a more liquid market, and take it to the next level? These are the questions that I'm going to be discussing with my estimate panelists. I'm very, very lucky today to have a very varied set of experts going from the UAE, Egypt, but as well as an Islamic multilateral development bank and an international bank that also acts as an agency broker. The way that we are going to be looking at this panel is we're going to set the scene to see what are the differences between those markets I just mentioned. Then we're going to be looking at the operational and infrastructure challenges and opportunities for the repo market. We're not going to miss the ever so important Islamic repo market because of the location where we are, but also the opportunities it's opening. And lastly, we will be looking at the future of the repo market. Just before I introduce my colleagues and friends here, just want to let you know the way that I tend to organize my panels. We are going to be a bit shorter in time because I'm sitting here between you and the gala dinner, so we'll try to make it as relevant for you as possible, but we're going to try and keep it very succinct. The way I organize my panels are, rather than having the QA session at the very end, I'm going to invite one of you to react to the question after each of the questions by either asking a question or making a comment. Please keep it to 1 or 2 sentences. For those who know me, I would be actually trying to keep it and make it happen as short as possible as well. I'm going to be introducing my very good friends here by the way they're sitting. I have here my friend Munib Azhar, Director from the Funding Center, Treasury and Global Markets at Mashreq. My very good friend here, Mohamed Yasser Gorb, Senior Investment Specialist, Fund Manager, Liquidity Investment, Treasury Department at the Islamic Development Bank. My other very good friend, Andrew Stevens, Executive Director, Buyside Trading Services Sales at JPMorgan Chase. And last but not least, Omar Adel, Head of Treasury and Financial Institution at the Arab African International Bank. Thank you very much, gentlemen. Maybe if you can very briefly introduce each other, and then we're going to be setting up the market.
Sure. Good afternoon. My name is Munib. I'm part of Mashreq Bank's ALM team. In a nutshell, my job is to ensure that the bank never runs out of money. And God forbid, if it ever does, you know who to blame. Repo is what I do day in, day out, and I look forward to having an engaging discussion this afternoon. Thank you.
Hello, everyone. Happy to be here. My name is Yasser Görpe. I'm a senior investment specialist in the liquidity investments team at the ISDB Treasury. I sit on the Sukuk execution desk, looking after the bank's Sukuk portfolio. And more recently, we've been looking at repos, and I'll share some insights along those lines. Thank you.
Good afternoon, everyone. I'm Andrew Stevens. It's a pleasure to be here this afternoon. My role is somewhat different to most of my esteemed panelists here, where I work within the securities lending and financing business at JPMorgan. I spend quite a lot of my time working with public sector pension funds, sovereign wealth funds, helping them to generate liquidity or monetize assets that they have within their portfolio. Often repo and securities lending and financing can be used interchangeably. And I'd say across the GCC, securities lending rather is maybe a couple of steps ahead of repo in terms of its development and its use. So I hope to provide a slightly different perspective to my panelists.
Good afternoon. My name is Omar Al-Adil. I'm the group head of Treasury and Financial Institution. Throughout my career, I was very lucky to work on both sides of the table. I worked as a primary dealer bank for a long time, and as well I worked on the asset management side for almost 10 years.
Thank you very much, gentlemen. As I just mentioned, we're going to start by setting up the scene. What is repo? How does it make work in your respective market? And then what are the market participants? We're going to start with Egypt with Omar, followed by Munib on the UAE market, and then Islamic finance with you, my friend Yasir. And we finish by looking at the agency working. Over to you.
Thinking about repo and the capital market and money market is like going back 30 years and remembering my career journey because Egypt market had a very long and successful steps into the development of money market and capital market. And when I think of repo as the bridge between money market and capital markets. And to give a good description of how repo deepened the market and developed both sides of the equation. When I started at the dealing room at the Arab African in the 90s, there was no monetary policy framework. Discount rate was announced by the central bank as indicative. It was not very much related to the pricing of money market. Spreads, funding was very much dependent on interbank deposits and FI lines. So it was the spreads between taking and placing money in the local market was very high. It could reach 10%. Beginning of the 2000 with the introduction of monetary policy framework and which is mainly the corridor whereby the central bank takes money at the bid side and lends at the offer side. It was the first sign of collateralized lending at that time because the lending side was against an overnight lending side against treasury bills and bonds. And also introducing the monetary policy tools at that time where the first monetary tool was a reverse repo to observe money from the market. And at the same time, money market funds was started to grow and they had the need for short-term, high-yielding assets rather than just placing deposits with banks. And the coincidence was that at the same time, we were engaging in the reserve repo with the Central Bank of Egypt. We sold this to the money market fund. And this was the start of a continued dealing on the repo market for availing assets for money market funds and fixed income funds. As a primary dealer at the same time, the lack of transparent repo market and available data made it very hard for primary dealers to commit to their quotas with the Ministry of Finance. Because if there is no repo market, then all the assets that you buy and all the securities you hold, you fund it from the bank deposits, which at some times, and when interest rate move very high, like economy like Egypt, then these assets or this inventory becomes illiquid. The only way to have this liquidity is to have a deep repo market. Going forward to 2020 and until now, more of the development happened on the settlement side of things. So prior, treasury bills used to settle at the Central Bank of Egypt. Treasury bonds used to settle at the Ministry, stock exchange and mass clearing. Now, after the introduction of ECSD, all the settlement happens in one place, and the introduction of electronic screening, this gave more insight on the volumes that is being done in the market and the differentiation between how much repo and how much outright sales happening. Now we can see that 16% of the weekly volumes comes from repos. Still, there is more to develop. The data is after the fact. The shape of the yield curve and anticipating the yield curve also happens at a later stage, and there is delay between what we transact and how the yield curve. Also, also starting 2020, they introduced the Konya, which is equivalent to SOFR on the Egyptian pound. And this provided an indicative rate for all the money market. It's an overnight rate that is the average that deals resulted from the interbank dealing.
Thank you very much. Munib, do you want to give us some light on what's happening here in the UAE?
Absolutely. Thank you, Sanaa. I think what's important for UAE and the region as a whole is to understand that this country and the region is going through an inflection point where repos are evolving not from just a product where we raise money, but as a tool of optimizing the balance sheet. I think that's very important since the advent of Basel III reforms, and we've seen increasingly that banks are focusing on repo as an active tool rather than a reactive product. So this is very important in development stage as we speak, and not just on the conventional side, and the leadership with the GCC and UAE in particular has shown in Sukuk issuances, the concept of Islamic repos is going to gain prominence. It's just not a start. We're going to go ahead and hopefully with better regulations in terms of prudence and standardization, this is something which we can pick up and take the lead as a country. So repo, again, as a whole, is something which cannot be ignored at all. From vanilla stuff to all the way to exotic structured solutions, repo is the way forward, and it is part of a very important ecosystem of the capital markets. The capital markets cannot thrive without a functioning repo and the liquidity which it generates. So this is important, and I hope, with the regulations, especially on the Islamic side, we look forward to a fruitful generation of repo as a tool to generate liquidity and support the overall ecosystem.
Thank you very much.
So on the Islamic side of the repos, to set some context, I think it's important to look at some numbers. While numbers specifically on Islamic repos are difficult to come across, I think we can refer to the IFSB's numbers that were published in their Islamic Financial Services Industry Report, the latest 2025 report. So according to the report, the global Islamic financial services industry expanded by 15%, reaching almost 3.9 USD trillion. The Islamic banking sector grew by 17% in 2024, making up almost 70% of the Islamic financial services sector. And finally, the Sukuk markets, measured by the amount of Sukuk issued, rose by 25% and made up almost 23% of the total Islamic financial services market. And you may have seen in the headlines earlier this year that we have now crossed the USD 1 trillion mark, marking yet another milestone in the Islamic capital markets. While these numbers represent the relevance and importance of the Islamic capital markets, I think just by the fact that Islamic banking and Sukuk make up 95% of the total sector shows that Islamic repos can be quite relevant. In fact, more relevant than we might think, because if you were to look at any literature on Islamic banking and liquidity management, the one thing that you will keep running, the observation that you will keep running into is the fact that there's limited number of tools to effectively manage risk, liquidity, and funding. In fact, treasury desks in conventional banks, and I would ask Munib, if you probably cannot imagine a world without repos, but for the Islamic banking sector, actually that has been the reality for a while. Similarly, it's difficult to quantify the size of the Islamic repo transactions, but I'll quote in one of the Fitch Ratings' latest Islamic finance compendium, in Malaysia, which has one of the most advanced Islamic finance ecosystems, the Islamic repo market is far less developed than the conventional repo market, with only around 1% of the total Islamic money market transactions. One of the reasons why it's been slow to take off is probably due to differences of structures and differences of opinions. At the moment, while IIFM has led efforts to standardize through their MCMA agreements, it's been accepted and widely used in the UAE. The sale by back agreement has been utilized in Malaysia, and in Saudi Arabia, now the double WAD structure is getting picked up. What are the key differences between these structures? We can talk about many. For example, in the double WAD, there's an actual transfer of the title, while in the MCMA agreements, there's a separation of the title and the beneficiary rights. So as IDB, what are we looking at in the space? We are a supranational, self-regulated, and we are looking at it from multiple angles. As of now, I can tell you that we have our Sharia approval on the MCMA agreement, and we are in the primitive stages of looking at the double WAD agreement. Additionally, in terms of utilizing the product, we are also working on planning a familiarization session internally to bring all stakeholders on the same page. The IDB has been quite relevant in the development of Islamic finance. We have had roles in developing the Islamic banking sector in many of our member countries. Through the ISDB Treasury, we have been part of the evolution of the sukuk markets. We have one of the largest sukuk portfolios on the investment side, and on the sukuk issuance side, the IDB is the only AAA-rated sukuk issuer in the space. And I can tell you that with the momentum being talked about on the Islamic repo space, we will be part of that evolution as well.
Thank you very much. We looked at the different markets and constituencies of the repo market, but let's look at how we can source the liquidity. What is the role of the prime and agency brokers? Andrew, do you want to lead the way on that?
Yeah, sure, Sanaa, thank you. The repo market, obviously, is a wholesale market, and by its very nature, then suggests that there are barriers to entry. And traditionally, it's been an interbank market or government to interbank market, and that has functioned well. But when you start to look at trying to, especially in a place like the GCC, where you're looking at trying to increase the liquidity in the market, increase the number of participants in the market, not every investor or every potential counterparty, whether it be a corporate or a buy-side name, has the operational know-how, the investment dollars to be able to set up their own repo capabilities. And that obviously then has the impact of limiting or providing restrictions for the number of participants that can go into the market, and then in turn limits liquidity. So if you think about what needs to be done, so first and foremost you need to think about the regulatory and legal framework. Is there enforceability? Is there netting opinions? How do those differ from jurisdiction to jurisdiction? Then once you overcome that, it is, do we have the necessary human capital, the intellectual capital, from a trading perspective, settlement perspective, collateral management perspective? Assuming you find all that, then we have to start looking at things like the trading platforms, the infrastructure. Is there a functioning RTGS, CSD to be able to settle trades? intraday liquidity lines to settle trades, finding reliable custodians. And then once you package all of that together, you then got to look at, is there sufficient collateral? Is the liquidity in the market deep enough to be able to sustain and to create an active repo market? Now, as I said at the beginning, for the sell side, that is relatively kind of a low threshold. But for the buy side and for corporate firms who often have a need or would like to have access to the liquidity that the repo markets offer, or alternatively would like to put excess cash to work through the repo market, those can sometimes be a hindrance. And that presents opportunities for prime brokers, agency brokers such as ourselves, to provide an agency model for counterparties to enter the market. So rather than going off and trying to sign multiple bilateral trading agreements, if you can sign one agreement that gives you access to numerous counterparties, that's an immediate win. Then rather than having to hire your own trading desk, someone to do the collateral management, give it up to an agency broker and they can take care of that for you. So essentially what I'm saying is there is a lot of operational lift or considerations that need to be taken when the buy side or corporate firms look to enter the repo market. And what the large institutional banks can offer is a level of operational leverage that makes that transition a fair bit easier.
Thank you very much. Gentlemen, do you want to actually add to this? Are you using electronic trading or prime brokers or agency brokers?
So what's important to understand is that electronic trading in this region is at the beginning stage. And as the previous panelists mentioned, this region thrives upon relationships. So do we need a combination of both? The answer is yes. But what's important and what's is going to come in the future is the fact that the concept of instant payments, which we're already seeing, that will be the driving force between electronic trading. Because there will be instances when the banks are sleeping, the payments are going out, and that's where the repo and through the automatic trading platforms will kick in. So that's the future of the repo which is heading, and in that regard, the electronic trading platforms, or rather the ability to automatically transact when everybody is sleeping, that will be critical. And that's something which I'm sure we'll see over the next 5 years. So that's important to be, and that's the future where the repo is heading. Apart from that, on the Islamic side, I would like to add one point. The regulations are evolving. And with the evolving regulations, what's important is that maybe a decade or more ago, there was a narrative that there is a scholar for $1. No, that's no longer the case. And that's primarily because the AOFI guidelines, each country having its own Sharia board, governance at each bank, and regular supervision. So that has brought the confidence in the Islamic structures, and it is evidence from the issuance in Sukuk. I mean, over the last 5 years, within GCC, the Sukuk issuance compared to the conventional bonds is almost 50-50, where it was heavily skewed on the conventional side 5 years ago. So the confidence which the market has shown on the Sukuk side, on the capital market front, it will come along with the standardization on the repo space as well. And that is when Mohammed, you said that, for the conventional side, it's bread and butter, but not for Islamic. Maybe it's just a matter of time.
Thank you very much. On the operations, we will be touching back on the Islamic finance a bit more in depth. But Omar, would you like to add something before we move to Islamic finance?
When repo is available and deep, investment decisions tend to change, because if there is no liquidity, then a fixed income asset manager, for example, will have to have an eye on the amount of liquidity he has, and this could jeopardize the return that happens over a long term. Knowing that there is a deep repo market and that he can turn his assets into cash, it will affect his asset allocation as well. Also, from a primary dealer side, if repo market is active and access to liquidity is there, then covering the quota of the primary dealer does not become subject to his own muscles, but rather than the whole liquidity in the market, because inventory then can be funded other than the bank deposits, in a way. Also, if we're talking about Islamic repo, I'm very happy to say that Egypt started to issue Islamic sukuk and in tenors of 3 years, and this could pave the way for also a deeper repo market when it comes to Islamic repos.
Thank you very much. Before we dive deep into the Islamic repo and the usage of it, I'd like to give the opportunity to the audience. Do you have any questions that you would like to ask the panel on the usage of repo or the operational challenges or anything? I cannot see anything, so. No? Oh, yeah. Can anybody give a microphone, please?
Thank you. On the previous panel, we discussed briefly how having a deep and liquid repo market would help attract hedge funds. It obviously allows them to undertake or enter into various RV strategies, curve trades, barbells, swap spreads, derivatives, derivative spreads, basis, etc. Do you think this would be an additional plus for liquidity in the underlying markets? Or do you think it comes with risks?
Sure. So having more participants is a welcome change. And that's what we have seen over here as well, with the participation of non-banking NBFIs, typically within the space. We see liquidity ramping up within the repo circles as well. So to the question whether it is beneficial, absolutely yes. Does it come with risk? Well, of course. I mean, that's something which the banking sector thrives upon. So the risk will be there, but at the cost of additional liquidity, which is beneficial for both the repo system and the bond market itself. So to answer the question in a nutshell, it's a good thing to have.
Thank you. Do you want to add something, anybody? Okay, thank you. We've been talking about the importance and the potential that the Islamic repo market is actually bringing to the repo market. There is an appetite, not only in the region, but also in Asia, in the US, in Europe, sorry, and in Africa. But yet, it's a very fragmented market. The different legal framework are actually very much of a challenge in limiting the possibility for each of you to trade on Islamic repo. We see the double wide on one hand, the IOFI documentation on the other one, plus the CMCS. Yes, on the last one. We are working as an industry towards the standardization of the repo market, including with the partnership, the future partnership that we're working on at the moment with the IIFM and ICMA in order to standardize a Sharia-compliant repo agreement. But if you can share with me briefly, what is your experience, in particularly maybe starting with you, Yasser, in terms of the developments, the challenges that you're seeing, and what we can be doing beyond standardizing the legal agreement to develop the repo market in Islamic finance?
I guess the other topic that needs to be discussed more is the behavior of the Islamic investors and bankers in general. Like it was mentioned in the earlier panel, a lot of the sukuk holders, the Sharia-compliant investors, hold sukuk until maturity. This could potentially be another issue. Can you use hold-to-maturity sukuk as a collateral for a repo transaction? Questionable, but it needs to be discussed further. But what we know is that to bring additional liquidity to the market, to the sukuk space, to grow it further, the use of repo agreements and transactions need to increase. And in terms of the operational side, the Islamic agreements are infamous for being very document heavy. But for Islamic banks themselves, this is not an issue. This is something that we are used to. And having the repo agreements without any preference to any is just business as usual for us. It would only unlock additional liquidity and optimization in terms of our funding.
Wendy, maybe?
Sure. So I think one more thing which we can add is, of course, the challenge which the market in Islamic front faces. So as also Yasser pointed out before, the right to reuse under MCMA is not allowed, and which is the core function of the conventional liquidity in the repo markets. Maybe the evolution of structures across geographies is something which will help. Like for instance, double wad use in KSA is not welcome here, or some structure used in Malaysia is not welcome in KSA. So the standardization of these underlying structures and frameworks, they will go a long way in coming up with the required liquidity. But that being said, in Islam there is always a concept of hope, and inshallah one day, we get to be there.
Thank you very much, Andrew.
Yeah, I'll just add, from an international bank perspective, as a liquidity provider, I think this idea of fragmentation does prevent kind of a wholesale move into the Islamic finance space, because ultimately to gain sort of comfort and to deploy a model that allows you to operate again across multiple markets, you need a level of standardization, both from an operating model perspective, but also from an agreement perspective. And I think if you look at Islamic finance, there's no one-size-fits-all sort of approach, and I think that needs to I wouldn't use the word resolved, but I think there needs to be some level of consensus as to what constitutes a Islamic repo prior to there being kind of a wholesale adoption of the structure.
Yes, can't agree more actually. In the interest of time, I'm not going to take a question here because the timer is actually telling me not to. I'm not going to ask you for your wish list. I'm going to ask you to get your crystal ball. What's the future of repo? Where is the repo market going in the region? And what is missing to take it to the next level? May it be standardization of the legal and regulatory frameworks, to getting new market participants or others. Munib?
Sure. So where is it going? Where is it heading? As I mentioned, we're at the inflection point. So this is where the market is actually transitioning from the unsecured space to the secured space, and having it more of an optimization tool rather than just a source of liquidity. What needs to be done is essentially standardization, with GCC being or almost having more than 50% share in Sukuks. It is logical and likely that the next repo structures evolve from this region. And this is the opportunity which this region has to take the leadership and bring forth the structure and the standardization, which is going to take the Islamic space forward. So that's my wish list.
I guess on the Islamic side, the size of the Sukuk issuances have been growing despite differences in opinions and structures. I think similarly, despite differences of opinions on the different Islamic repo contracts, we will see a pickup in the coming years.
Inshallah.
Was the question on Islamic repo or just repo in general?
In general,
okay,
the repo markets.
Yeah. I think Munib might have mentioned, did you say about the inflection point? And yeah, okay, so just following on from that, I think, as I mentioned in the previous response, I think standardization is key. I think definitely, if you look across the GCC, the various different countries have their own sort of visions and plans to kind of grow the capital markets, by 2030, etc. And I just don't see how that would be possible without a well-functioning repo and financing market. So I think the future is definitely positive. It's definitely bright. I think there's a few creases that need to be ironed out, but I think the collective brain power across the region will definitely overcome those, and I think there's definitely a market. And 10, 15 years from now, I think the market across the GCC will be, rivaling that of the international space.
Omar, please.
Also, I think repo in the past couple of years, and it will still be going forward, that it was a tool for emerging markets to get foreign currency by doing cross-currency repos. This is one side. On the other side, also, if I'm looking at the development of capital market / money market in Egypt, soon there will be the introduction of the OIS curve. which will facilitate hedging for our clients, either on the interest rate products or on the currency itself. So I'm very much optimistic about the deepening of the market that I work within.
Thank you very much. So we are all in agreement that if we want to take the repo market to the next step, standardization and, gosh, my favorite word, interoperability is paramount. And this is actually where trade associations such as ICMA, the UAE, FMA, and others have a very important role to play. It's not only down to the regulators and the policymakers to take our market to the next level and develop it. It is our own responsibility. Come and join us, come and speak to us in any possible capacity. Let's educate ourselves, let's educate our regulators, and set standards of best practice so we can attract more liquidity and make the Middle East repo market and bond market the proper and central hub, global hub it is and should be. Thank you very much.